With World Business Report, I'm Sally Bundock. Here are the headlines. Time for some explaining. The boss of JP Chase will tell US lawmakers today how his traders managed to lose $2 billion earlier this year. And does the boss of WPP, Sir Martin Sorrell, deserve a 60% pay rise? Shareholders will have their say today.
I'm Rico. He's on in Singapore, and shares of clothing retailer Esprit are tumbling the most in almost 15 years on the Hong Kong Stock Exchange after the firm's CEO resigns.
Good to have you with us. Well, it's not often that you get to hear one of the big names in banking apologize, and they don't come much bigger than James or Jamie Dimon, the chief executive of JP Chase. Mr. Dimon appears before the US Senate Banking Committee later today to explain how his company lost at least $2 billion in trades at his chief investment office. In his prepared testimony already released to the press, he apologizes for letting a lot of people down, should I say. From New York, here's Jill Martin.
The tables have turned on the boss of the biggest U.S. bank. James Dimon has to explain to lawmakers what happened to at least $2 billion that JP Chase lost in a series of risky bets by its chief investment office. Some say those losses could rise beyond $5 billion. It's not just an expensive mistake. For this chief executive, it's also embarrassing. In his prepared testimony, James Dimon will stress that this was an isolated event. He's also expected to point out that the bank did not lose any client, customer, or taxpayer money. Still, critics argue that as the man at the top, Mr. Dimon should have known better.
Well, he's the boss. He can say, we don't want to do this. I think he probably approved the activity in general, and I suspect that it was packaged as a hedge, that is to say, offsetting other risks in the bank, but it got out of control.
Now, experts say it looks like the whole industry needs to remember the lessons learned from the meltdown 4 years ago.
The arguments that Mr. Dimon has been making and other bankers have been making that excess regulation is more a problem than unregulated banks, that takes a huge hit. Obviously, if Jamie Dimon can't run one of these banks, it raises the question, can anybody run one of these banks that are even larger than they were when the U.S. entered the financial crisis?
JP Chase is, after all, a $2 trillion bank. Experts expect it to recover from its multi-billion-dollar trading loss. But James Dimon faces a tough few months ahead. Jill Martin, BBC News, New York.
It's shaping up to be the latest battle in the so-called shareholder spring. At the annual general meeting of the advertising group WPP in Dublin later, shareholders will be voting on whether its chief executive, Sir Martin Sorrell, should have had a pay rise of 60%. Now, he already has a basic salary of $10.5 million a year. Jeremy Howe reports.
Action! WPP has much to blow its trumpet about. From a small firm making wire baskets, it's become the world's biggest advertising group, owning prestigious agencies like J. Walter Thompson and Ogilvy and Mather. Last year, when many firms slashed ad spend, WPP increased global profits by a fifth. Despite that, many shareholders and the consultancies which advise them say Chief Executive Sir Martin Sorrell shouldn't have been given his 60% pay rise.
The performance of this company is basically average. It's what you would expect a return on an equity to be, about 8 to 9% a year. It's not investment failure, but it's certainly nothing stellar. But the performance not being stellar, merely being average, is being matched by quite stellar pay.
This is the latest skirmish in the so-called shareholder spring. 5 times in recent months, investors have revolted against the rewards handed to top executives in UK-listed companies by their boards. Sir Martin Sorrell says that he will fight the shareholder rebels. He says that he shouldn't be confused with Britain's banking bosses, who first sparked shareholder anger, as they claimed huge bonuses as their banks plunged into losses. On the contrary, he says WPP is profitable, and in the last financial year became the biggest advertising firm by value in the world.
Most of his strategic decisions were made earlier on, such as seeing the integrated maritime communications across multiple platforms, going into emerging markets, which he's done very successfully, and of course having a multi-global set of offices for around 100 countries. But recently that hasn't necessarily justified the dividend that he's now reaping.
But Sir Martin Sorrell hopes to clinch his pay claim with this. The firm WPP overtook to become world leader is America's Omnicom. Its chief executive gets $15 million a year, and Sir Martin says his pay has to be in the same league. Jeremy Howell, BBC News.
Now, we're talking a lot about CEOs and the pressure they're under. Well, shares in one of the world's biggest fashion chains have plunged in Hong Kong. Its chief executive is on the move. Rico Hizon is in Singapore to explain. We're talking about Esprit, aren't we, Rico?
Sally.
Tell us more about this story.
That's right. And on the move, as you say, and indeed, the share price of Esprit is also on the move, having its steepest fall, Sally, in almost 15 years on the Hong Kong Stock Exchange. And the firm announced just earlier today that its chief executive, Ronald van der Vries, had quit due to personal and family reasons. And his departure, Sally, comes at a time when the firm has been trying to restructure its operations in a bid to improve its profitability. Esprit shares falling as much as 22% today, Sally. And Mr. van der Vries is the second senior executive to leave the company over the past year. 6 months ago, the clothing retailer lost its chief financial officer. The firm, which relies heavily on sales from Europe, has been going through a tough time amid a fall in consumer demand. And with the departure of the chief executive, according to some analysts, they're worried of whether the firm will be able to carry out the restructuring plans in time. Sally.
Now, tell us about the markets, Rico, because it's been quite a week, hasn't it? Monday, strong rally. Tuesday, losses. How's it going today?
Well, today it seems like we will see an extended loss for the Asian markets. Earlier today there was a brief rally, but now they're drifting mostly lower amid persistent worries over Spain, Italy and Greece, and if whether European policymakers have indeed the ability to contain the continent's simmering debt crisis. And these lingering concerns, Sally, outweighing a big U.S. rally overnight. Today you have the likes of South Korea, Hong Kong, Australia, Taiwan, Singapore opening higher, but right now they are all in the loss column. In currencies, the euro, after a strong New York trading session, is weakening in Asian trade. Regional emerging currencies are also depreciating versus the dollar as investors in midday trading flee to safe haven currencies such as the greenback and the Japanese yen. As for oil prices, they also remain weak, with Brent crude slipping below $97 per barrel ahead of a key meeting of the oil cartel OPEC this week. Sally.
Thanks very much, Rico, there in Singapore. Well, let's now squeeze in some other business stories. There you are. The internet needs more addresses, apparently. So today, the body which approves domain names like .com or .net is taking action. It'll release a list of 2,000 proposals for new address suffixes. It could see names like .music or .bank added to the system. But it's likely to take a year or two for the new suffixes to win approval and go into use. The Internet Corporation of Assigned Names and Numbers, known as ICANN, is organising the expansion.
It's really opening up the internet domain name like it's never been opened up before. So we have 22 top-level domains in the internet today when you think of .com or .net or .org, and now we're opening up to 1,930 new applications. And many of those might be successful, so it's a very significant expansion. It also will include internationalized domain names, so domain names in other language scripts, which is very significant for users around the world in, say, China or India.
Now, Spanish debt will be under scrutiny on the markets again today. The yield or interest rate on 10-year Spanish government bonds hit a record of 6.81% on Tuesday. It shows that investors are still very cautious about the prospects for Spain, despite the €100 billion bailout for the nation's banks. Inditex, the owner of the Zara fashion chain, reports first quarter results in a few hours. Despite weakness in Spain, its home market, Inditex reported an 11% increase in annual profits last year, and the company's success has made its founder, Amancio Ortega, Spain's richest man. So that company's still doing well despite the crisis in Spain. I will see you soon for a look at the newspapers. Thanks for watching.